You've seen the headlines, you've heard the chatter. Bitcoin is pushing new highs, and it feels like a massive wave of optimism has just taken over the entire market. But what if the herd is missing something? What if there's a critical piece of the story they just don't see? It's the complete opposite of how things felt back in late 2022, when everyone was terrified near the lows. So today, we're going to cut through all that noise and break down an analysis that shows what might really be going on under the surface.
And it all starts with this idea. This quote really nails a core truth about markets. What does it mean? Well, it means our human emotions often work against us. We get the most excited, the most bullish, right when prices are already stretched thin and the risk is actually highest. And we get the most fearful right at the bottom. It's a powerful force that often leads people to do the exact wrong thing at the exact wrong time.
And look, this isn't just some theory. Check out the track record here. Remember late 2022, the whole FTX disaster? Fear was everywhere. But that's when the IO fund flashed a strong buy signal, right near the $16,000 bottom. Fast forward to today, the price is up massively, and that tidal wave of optimism is here. But now, their system isn't saying strong buy. It's telling a much, much more complex story that we really need to unpack.
Okay, let's dive right in. We'll start with the good news, the bull case. Why could this rally have a whole lot more room to run? Well, the answer comes from looking under the hood of Bitcoin itself, at what's called on-chain data. So according to the on-chain analysis from Wealth Umbrella, which the IO fund uses, the network's health is surprisingly strong. For one, volatility, how much the price is actually bouncing around, is near rock bottom. And that's something you usually see at a market bottom, not a top. It's like a coiled spring. At the same time, the long-term holders, the smart money, they've eased off on their selling, and we're seeing new investors steadily coming in. But maybe the most important thing, the market's fever, let's call it, has cooled way down, which means there's plenty of room for things to heat up again. So, you add all that up, all those healthy signs, where could we be headed? Well, when the simulations crunch these numbers, they point to an average cycle top right around $214,000. In a nutshell, that's the bull case. It's a big one. But, and this is a huge but, there's a powerful force out there that could slam the brakes on that whole bullish picture. And it all comes down to one word. One that's probably the most important concept in finance right now, liquidity. So what is global liquidity? The easiest way to think about it is like the oil in the engine of the global economy. When there's lots of it, money is cheap, credit is easy, and all that extra cash looks for a home, often in riskier assets like stocks and, you guessed it, Bitcoin. But when that liquidity dries up, the engine sputters and risk assets get hit hard. And what's the biggest driver of this whole liquidity machine? It's the US dollar. Why? Just look at this. A massive 64% of all debt in the entire world is priced in US dollars. That means just about every country, every major company, they all constantly need to get their hands on dollars just to pay their bills. This creates an inverse relationship that is so powerful, it's almost like a law of physics for Bitcoin. A strong dollar sucks that liquidity out of the global system, and historically, every single major Bitcoin bear market has happened when the dollar was getting stronger, and every bull market happened when the dollar was getting weaker. According to this analysis, there have been zero exceptions. And this brings us to the critical point, why this matters right now. That dollar weakness since late 2022, that's been the fuel for this entire Bitcoin rally. But look at the chart. The dollar looks like it's trying to carve out a major bottom. It's at an inflection point. And if it reverses and starts heading up, history tells us that it could act like a massive anchor on Bitcoin's price. Okay, so we've got a serious conflict here, right? We have the on-chain data giving us a big green light, but we've got this flashing yellow warning light from global liquidity and the dollar. So how do we break the tie? This is where a third tool comes in, technical analysis. We can use it as a roadmap to navigate the price action. The framework used here is called Elliott wave theory. Now, don't let the name scare you. It's a simple idea. Crowd psychology isn't random. It moves in a predictable rhythm, kind of like a five-step dance. Waves 1, 3, and 5 are the big moves up, and waves 2 and 4 are the breathers in between. The key one for us is wave 5. That's the final push, and it's often the trickiest one. So where are we in that five-step dance? According to this wave count, we are right there. We're in that final, deceptive fifth wave. That huge explosive rally we already saw,
That was wave 3, the powerhouse move. The choppier action we've seen since then, with all the optimism but maybe not the same explosive energy, that fits the personality of a wave 5 perfectly. And that, of course, brings us to the million-dollar question for anyone invested in Bitcoin right now. If we're really in the final inning of this bull market, how does the game end? Well, the technical map suggests there are two very distinct paths from here.
First up is what we'll call the red scenario. In this version of the future, Bitcoin makes one last push, but it runs out of gas. It stalls out at or just below a key resistance level around $149,000. A failure there would be the market's way of saying the party's over, likely leading to a major correction back down into that $40,000 to $70,000 zone.
But then there's the green scenario, and this is the one that lines up with all that bullish on-chain data we talked about. In this path, Bitcoin doesn't just tap that 149 level, it smashes right through it. A clean, decisive break would be the signal that the final wave is extending, opening the door for a much bigger run towards those $200,000 plus targets.
So we've got two paths. And that might sound confusing, but it's actually the opposite. It's empowering, because if you have two paths, you have a map. And that means you can have a clear game plan. It's not about predicting, it's about preparing.
So really, this whole thing boils down to one single, incredibly important number, $149,000. That price level is the decider. It is the fork in the road, it's the line in the sand that tells us which of those two paths we're on. So let's put it all together right here. Think of it like a traffic light. The on-chain data, that's a screaming green light. Go. Global liquidity and the dollar? That's a yellow light. Be careful. And the technical analysis? That's the roadmap. It tells us that 149K is the intersection where we find out if we're hitting the gas or slamming on the brakes. This all leads to a really clear, systematic plan that takes the guesswork out of it. The strategy is to trim a little, take some profits as the price moves up towards that critical region. Then you just wait and watch. You let the market show its hand at that 149 level. If it gets rejected hard and breaks down, you sell more to protect your capital. But if it blows right through with conviction, you can jump back in to ride that bigger final wave higher.
So, in the end, we're left with this. Instead of a jumble of confusing signals, we have a clear map with a very well-defined fork in the road. The on-chain bulls and the liquidity bears. They're about to have their battle, and the price action right at $149,000 is going to tell us who wins. Now, the only question is, which path will Bitcoin choose?